traders, the purpose of this video is to dive into RE alloys and just take a look at what it was about this chart that gave me so much conviction of being in down here. Since then, it's made over 100% move. I believe it's not done. I believe that we're going to see some chasing, especially when we get to this 21 level. But so in hindsight, when you see a chart like this, it just seems so obvious. But let's just go back and take a look at the original thesis that got me in on this one. This was actually not the first time that I shared ALOY, alloy. This was May 27th. I shared it back in early May, and it did have some frustrating times for many traders along the way. Each one of these candles that we'll look at, these are a day. And so when we zoom in just a little bit more, you can see how this is chopping. But one thing I want to point out for sure is first the P in plan. The P is patterns. I want to make sure that I'm looking for patterns of something that's consolidating, compressing into a support. And you can even see in this case that support has just a slight rise on it. On May 27th, you can see just a huge rise in volume. After earnings, came back, but you can just see as it was coming back at support, you just saw all these spikes in volume. So we're just looking for this as well. This is the volume shelves, the VRVP on TradingView, and that just tells us that all this volume is coming at this price right here. So I like to call this the volume vector, where you've got volume spikes here, you've got the horizontal volume showing where the price is really getting the most attention, and then you can see the gaps above so that it can release above resistance, and you can see it has less resistance above here. Right now we're trading over 100% on alloy. So sharing the process with people, and hopefully if you didn't get in on this one, you'll be able to see this kind of a setup in the future as well, where you see rising volume coming in at support right at that compression. So the next part of plan, I just tried to simplify this for everyone, including myself, is that the L is the levels of support and resistance. So when you get in on a chart, and when we do the replay, I'll go ahead and I'll show how I get these lines of support and resistance, but you got to know where your exit is. You don't enter a stock until you actually know where your exit is. Then the A is to assess confirmation. And in this case, we're just going to look at daily confirmation. There are some videos where I'll show you on a daily where that 5-minute confirmation comes in. And then the N stands for nail your exits. Know exactly where you're scaling out. And here we are in late May, and I know you're looking at this and you're seeing this breakout and you're just thinking, right, this is it right here. You see the rising volume coming up in here, and it very well could have occurred. But then you see a candle like that, and you can just see how some people would get out. They would just be bored. They would think, well, I was excited for these last few days here, and now it just isn't going to happen. And I would say, yes, I mean, protect your money as you go, but don't just throw that chart in the garbage, because you will see that it's continuing to hold support. So when we start to see something like this, you'll notice that I just took all of the EMAs off of here. When we look at something like this is where I shared it in the newsletter on May 27th. If we come back to that, I shared more details on the fundamental side. Very soon they're going to announce that it's going to be on the Russell Index. And my personal plan that I shared at this point on May 27th was that I was going to DCA, or dollar cost average, as long as the 907 support holds. So come back to this chart on our replay. That's where I got the 907 support. The white lines I use as entry points. That's a breakout level right there. But if I'm in on a 907 thesis, I want to be ready to even scale a little bit right there. Make sure I just continue to manage all of my risk. Now, this might not be the exact levels that we'll see on our charts right there, but I can just show you how I'm coming up with some of these. So right here, I do remember 1445 is a big key level on this one. But I'm just looking for a theme here. Yes, I could go ahead and put resistance right up here, but I can see there's a confluence of candles right here, and I don't want to be stuck holding the bag if something does fly up here. So I want to be able to make sure I'm selling into resistance, and then if it does come back to former resistance and make that into support, then I can actually add again, and I can trade around a core position. And we'll set one more level of resistance here because there is a gap. There's a gap to fill right up here. And I'm looking at this candle and I'm looking at the bottom wick of this candle. So I'm looking at the daily close of this day, and it's kind of taking an average between the two of those and just saying, well, this line will actually define what's happening between multiple candles here. Don't haggle over pennies. It just gives you a really good idea of where you're going to scale out. And so this is a chart. It's just fascinating to watch. You can see right there, again, it pulled back to the 907 and then it bounced. And so that is just a massive thing to understand. As long as they're continuing to honor support, that is a chart that is still worth your time, even though you might have gotten frustrated with it. So now you can see the volumes coming in on the move. News was dropping about all the things they were going to be doing with Russell. They were making some contracts, some acquisitions. The news comes when the chart is ready to fly. So right there, you can tell there's some people that are going to probably try to enter at this point because it looks like it's going to fly. When we were managing this position, we spent some time looking at this and saying, okay, let's go ahead and just reassess what's going on here. That right there, that candle, the bottom wick of this candle seems like that's actually significant. This candle right here, it doesn't seem like the market is paying much attention to that one. So you can see right here, a pullback and then up to resistance, and then a pull back to support. And you'll see this doesn't always honor the absolute bottom. It's not going to always honor the wick. But just understand, you want to be in a chart that actually has movement. Backwards, forwards, up and down as we're looking for support and resistance. Chopping, consolidating is actually a really good sign, especially when you see that volume along the way. And so each one of these, if somebody got in at 907, they can actually scale a little bit right here. They can scale a little bit right here, but they can add some on the pullbacks so that you're just trading around a core position. And you'll see, I think this will end up where we are today on the 22nd. That's where we're coming back and we're managing more on a daily time frame. And you can see right there how 1766 was serving as resistance right there. That's where we come back together in our intra-weekly newsletters, and these levels have been shared along the way. As you're just managing a position, there's no need to get into another chart when something is looking so great like this. And the chasers haven't even come yet. You can see the volume is just rising all along. So patterns with volume, then we're looking for lines of resistance. At this point, I'm only holding about 20% of my original position. That's okay. I know where I'm actually selling, and I also know I can find other charts along the way. I want a simple process of plan, and we'll continue to do that. There's a link here where you can get 20% off of the paid subscription. I share newsletters 3 times a week, once on the weekends, and then on Mondays and Wednesdays. I love charts. I really enjoy how this can actually bring some kind of rationality to a market that can feel irrational at times.